Hello, everyone, and welcome to TBR's Future Friday, TBR 2015 Predictions, a series of thought leadership webinars being held each Friday between January 16th and February 13th, 2015. Each Friday, TBR's research teams will share predictions for 2015 and beyond across the hardware, software, cloud, security, devices, professional services, telecom, and digital markets. Top TBR analysts will address the trends, drivers, and the business outcomes they predict will occur throughout the year. The Future Friday webinar series stakes out the status, changes, and key market directions that our lead analysts see happening. Before we start, there are a few housekeeping items I'd like to cover. First, we will be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the many other webcasts that we've posted. Second, we'd like to hear your opinions and thoughts on the material we're presenting. Please send any questions or comments through the Q&A or chat function. The presenters will address them at the end of the session. Or if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to our presenters at the end of the webinar to set up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides, as well as our thought leadership pieces, other webinars, and commentaries on SlideShare at http://www.tbr_market_insight. I will also post that link during the in the chat function during today's presentation. I'm Stuart Williams. I'm the Vice President of Research here at Technology Business Research, and leading our Data Center Predictions webinar today is Christian Perry, a Senior Analyst and Content Manager for the Data Center practice, and Scott Dennehy, the Senior Analyst and Engagement Manager leading our networking area inside the data center. In the Future Friday webinar series, TBR research teams provide business analysis on established trends that will continue in 2015, new trends for 2015, and long-term predictions for the field. As data center owners grapple with unprecedented levels of complexity in their ecosystems, they're looking beyond the traditional hardware stalwarts for solutions to their challenges. Although dedicated servers, storage arrays, and switches remain core to many data centers, customers are discovering that business-changing innovations can be found most often in system software. This spurred hardware vendors to reevaluate their long-term strategies. Some vendors are exiting market segments that were previously strategic to their goals, while others are shifting their resources to focus on software or new iterations of hardware standards. Considering this, TBR developed predictions for 2015 and beyond. The three types of trends that we'll discuss in this webinar today are trends that will continue into 2015. These are current trends TBR expects will continue or accelerate in the coming year. New trends for 2015, these are maturing trends that began to emerge in 2014 that TBR believes will expand in 2015. And longer-term trends. These trends are opportunities that TBR believes will begin in 2015 but will not have full effect on the industry for several years. Now that I've set the stage, let me hand the call off to Christian.
Thank you, Stuart, and welcome everyone. So as we look back to 2014, we saw a lot of activity in the data center infrastructure space. We saw acquisitions, we saw divestitures, we saw splits, we saw HP split, Symantec split, we saw the sale of IBM's x86 server business to Lenovo, we saw Atos acquire Bull. What we're seeing is a continued trend of consolidation. What's driving that consolidation is continued hardware commoditization. So as we take a look at the overall ecosystem of data center infrastructure, we continue to see the trend away from hardware and toward the software that actually runs that hardware. So if we look all the way back to, for example, HP's acquisition of Left Hand Networks, if we look at VMware's acquisition of Nicira, we start to see a trend, and this trend is continuing. And what we expect this year, this continues to be a very large market. Customers still need the hardware, of course, to run their workloads, to complete their projects. But the focus is coming off the hardware and moving toward software and software management platforms and the various software pieces that can help them run their data centers more effectively, more efficiently, and more cost effectively. So as this trend continues on the customer side, we will continually see more consolidation within vendors, within the vendor market, across the vendor market. We know that the large solutions players, HP, Dell, IBM, they need the IP to be able to compete as a solutions player. So we would expect that acquisitions will continue. And as they do continue, we'll see a smaller set of overall players in the market. John Chambers last year talked about brutal consolidation of the IT market moving ahead. We would tend to agree with that. And 2015, I think, is going to be a bit of a landmark year in terms of this consolidation, because we're beginning to see that customer focus is really centering on a more efficient way of doing IT. So expect that to continue this year. Expect that to continue beyond this year. We saw it last year. So this is one of our continuing trends.
Thanks, Christian. So if we look at the networking space in 2014, some of the trends that Christian just talked about were certainly in effect when you talk about the impact of things like software-defined networking and cloud on the business models of the enterprise network vendors. And what we saw in 2014 was vendors start to adjust their business models to accommodate for these changes and try to mitigate the impact on their legacy business and position themselves for growth over the long term. And one of the areas that we really saw that was in headcount realignment. And what you see here on the slide is a chart from our most recent enterprise network vendor benchmark that compares the headcount of some of the major enterprise network vendors from the first half of 13 through the first half of 2014. And I've got a few examples here highlighted. Cisco, for one, is actually increasing its headcount, getting much more aggressive in areas like cloud, like security, like software-defined networking, and you can see the impact on their headcount there. A company like Juniper is really been forced to rationalize their portfolio, and what the decision that they have made is, regardless of what you see in areas like software-defined, they're really counting on hardware to be their future, but really what they're doing is focusing on high-performance networking, so focusing on customers where hardware still really matters. And then last but not least, some companies have really been forced to get aggressive with their realignment. Unify is a perfect example of that. They announced back in June that they're essentially cutting their entire workforce in half, basically abandoning their legacy hardware business in favor of software and services. So this is a trend that we expect to continue in 2015 as enterprise network vendors continue to adjust their business models to position themselves for long-term growth and remain relevant.
So moving over to storage, when we look at customer trends and customer adoption trends around cloud, around data analytics, around mobility, we know one thing for sure, and that is data is accumulating at a tremendous rate. Now, you would think that that's good for the storage market, right? Wrong. Yes, there needs to be a place for data to go. But customers increasingly realize that they don't need those high-priced proprietary storage arrays for a bulk of data center workloads as they did in the past. One thing that we're finding, and we've seen this in our customer research, is that customers are grappling with high levels of complexity and management around that data on their storage systems as their businesses grow. So you have two forces working against the traditional storage market, and as you'll see here, there's not a lot of growth going on. However, what is happening is a lot of transformation. So EMC, NetApp, HP, and a few others here are changing their business strategies, changing their business models to try and adapt to this new customer mindset around some of these new data types and really just the massive amount of data that's in their environments. It needs to be managed from a more efficient perspective. So you have EMC and NetApp really focusing hard on software-defined storage, which we do feel is going to be a major disruptor moving forward. Do we feel it's a major disruptor now? Not yet, as customers are still determining how best to deploy these technologies in their environments. But we do know that there is a lot of interest there, and as customers deploy these in test dev environments and do so on a workload by workload basis, we feel that the deployments are going to show success, and as that success gets messaged around and shared around, we think that it's going to pick up in 2015. Now, as long as the primary players here in the storage market continue to evolve their software-centric portfolios and abilities and IP, and don't forget about the acquisitions as well and the partnerships around all of this, as long as that continues, these primary players will continue to be primary players in the storage market. Yes, there are many up-and-comers around software-defined storage and software-defined or software-centric platforms, which I'll talk about moving forward. However, we see a lot of progress within the businesses of many of these players here. So we think that it's heading in the right direction. However, the overall pie may decrease in terms of revenue because the price points just won't be as high. So this is something we'll be watching moving forward. But again, things are on the right path among the primary players here in the storage market. So for these are new trends that we see in 2015, or at least trends that we think are going to build more than they've been in the past. One of those is hyperconverged. Yes, it already exists. We are seeing spectacular traction with hyperconverged. We see hyperconverged platforms as the next evolution or the next step in the evolution of traditional converged platforms. So where you have on the converged side a static set of compute, storage, and networking all pre-engineered to work together. We also see that here with hyperconverged, but now we see things like dedupe, compression, cloud gateways, all built into the platform. Very hypervisor-centric, very virtual machine-centric, and it's a stepping stone that customers are recognizing toward virtualization. So a lot of the players that you see here on the table here, SimpliVity, Scale Computing, and others, Maxa, targeting very hard SMBs and mid-market players who have yet to get to the point with virtualization where they want to be. Hyperconverged can help them get there, and we're seeing that play out very heavily in the marketing efforts of the players here. So as customers move forward and as they look for alternative ways to do IT, because what we see with blades, what we see with traditional storage arrays is what I spoke to earlier, where customers are having a hard time scaling. So hyperconverged, there's a promise of a more modular approach that allows them to scale as their business grows. For the vendors in this space, there are a lot of benefits as well. There's a bit of a lock-in element here with hyperconverged that doesn't quite exist with converged infrastructure. That's a positive thing for hyperconverged vendors, for platform vendors here. And we do think, based on our research, we have extensive research in converged infrastructure. We've been following this for years. We do expect with hyperconverged that the levels of satisfaction are going to be strong moving forward, and 2015 is going to be a landmark year for hyperconverged platforms. We do feel that they're going to cut into the market of not only standalone hardware, which they're already doing, but also traditional converged systems, pre-engineered systems, and reference architectures as well. Now, there are reference architectures being built specifically around hyperconverged and Evo Rail. So, there are synergies here, and there are synergies across workloads between traditional converged infrastructure and hyperconverged. So there's a level of familiarity here that customers recognize. Lots of positive things going on here with hyperconverged. We're going to continue to cover this segment. We're launching research soon, specifically around hyperconverged. So stay tuned for that.
So what we expect to see within the networking space in 2015 is the competitive landscape around software-defined networking will intensify. Up until this point, most of the action, so to speak, in SDN has been within the telecom space or within the cloud service providers. But as SDN adoption in the enterprise space ramps up, obviously the competitive intensity is going to ramp up as well. And I think there's really two things that I'm really expecting to see as we get towards the end of the year. Number one is the true leaders of the SDN space will start to emerge. I think up until this point, talking specifically about the enterprise space, I think a lot of the early success that vendors have had, particularly the proprietary hardware vendors have had, has been selling SDN within their existing customer base, their largest and most loyal customers. But I think as enterprise adoption of SDN ramps up as we move through the year, there'll be more greenfield opportunities, there'll be more competitive opportunities. So this is when the SDN strategies of these vendors is really going to be put to the test. I also think that 2015 is going to be a very important year for what we call the white box vendors. So I have some examples there. So these are the vendors that their approach is software overlaid across commodity hardware. Again, they've had some success in gaining some traction within the telecom and cloud service provider space, but I think the enterprise interest in that approach has been tepid up to this point. So that what's going to be interesting to watch is whether or not these companies can convince enterprises that their approach, commodity hardware with the overlay software, is a better long-term investment for their data center as opposed to a solution from a proprietary vendor from, say, a Cisco or a Brocade, something like that. So I see a very important year for SDN in 2015, both in terms of enterprise adoption as well as the competitive landscape.
So the next set of predictions here are longer-term trends, so trends that we see taking hold beyond 2015. The first one we have here is around high-end storage arrays. The market, we feel, does not look rosy moving forward for high-end storage arrays. There are too many conflicting elements coming up against high-end storage arrays moving forward. So yes, there is still a tremendous install base for these arrays right now. And we're talking about, relatively expensive proprietary hardware that does have high levels of I/O performance and resilience. But moving ahead, Scott talked about SDN. Software-defined storage will really begin to have an impact on this segment moving forward, where you'll see more commodity hardware, and then you'll see that bundled with or used with software-defined types of platforms such as Viper and others. But we're still a little ways off from seeing a huge impact on the market. I'm looking more out toward 2018, where we will see these types of storage arrays, proprietary storage arrays, yes, still around, but being used more for a select group of workloads, mission-critical workloads, in particular environments and verticals. And for the bulk of other data center workloads, commodity hardware with software-defined platforms. There still are a lot of interdependencies in data center environments that's preventing wide-scale adoption of software-defined storage and the software-defined data center, if you will. We're a long way off from that, I believe. But the uptake is going to happen, and moving forward over the next few years, it's going to ramp up relatively quickly as some of these platforms begin to mature, the use cases expand, and the customer base also grows.
So Christian talked earlier in the continuing trends about the consolidation that's taken place in the data center market, and looking longer term for the networking space, I see a similar trend. And the consolidation is really going to happen in two fronts. First is around SDN. So I just talked a minute or two ago about 2015 and how important year that was going to be for SDN. And I think what we'll see as a part of that is we'll finally start to get a picture of what the customers actually want from SDN and what are they looking for from their vendors. And what I think that will result in is that vendors will start to take a look at the SDN market and make some decisions around what their portfolio looks like, and if they have gaps, how they can fill those gaps in. And one of the ways they'll do that is by acquiring whatever SDN companies might be left. Now, we saw a similar wave of SDN acquisitions take place in 2012, but a lot of that was around making sure that they had a story and looking for startups that had the most promising technology. What I think will be different this time around is that the SDN startups will really have to meet one of two criteria. Number one, do they have the technology that is going to meet the demand that they see from their customers? And number two, do they have a strong enough customer base already? So it's not just about the technology now, it's about what kind of traction do they have already in the enterprise space. So I think that's the criteria that the larger vendors will use when they look at the SDN vendor landscape to make their acquisitions. The other side of the coin in terms of the consolidation that we expect to see is around some of the more established hardware-focused vendors. You know, I talked early on about the transition that the vendors are trying to make and adjusting their business models to stay relevant. Well, I think there'll be some vendors out there that just won't be able to do that, either because they don't have the financial flexibility or they can't get their channel to make that shift, whatever the reason might be. There'll be some vendors out there, and I have a couple of examples here on the slide, that just won't be able to make that transition, and those will be the ones that will be ripe for acquisition either by other vendors that want to take that IP and fold it into their existing portfolio, or could be a private equity buyout scenario, and we're seeing that already. Riverbed was bought out by private equity not long ago, so I think that's certainly a viable option for some of the other these vendors. So really two main areas that expect to see the consolidation start to happen as we look longer term in the networking space, SDN being one, and then some of these legacy hardware vendors that just can't make that business model shift towards software that Christian and I have been talking about through the webinar so far.
Okay, Scott, thank you very much. Let's open up the Q&A function, please. If you have questions for the TBR team, don't forget to submit them via the chat function. So here's one that came in a little earlier. I think this one's for Christian. Who will be the early winners in the hyper-converged marketplace? It's a new space, so maybe you can give us a little bit more definition on it and what's going to happen there.
Sure. So we have a number of primary players here who are growing relatively quickly. And so I'm talking about Nutanix, SimpliVity, Pivot3, Scale Computing, who, these are pure plays, but they do have established partnerships as well, such as SimpliVity with Cisco, Nutanix with Dell. So we're starting to see some movement there. However, we would expect that much of the attention will be on these pure plays moving forward. However, and I won't even call it a dark horse, I'm going to call it a major threat to those, is VMware with Evo Rail. VMware has, of course, its massive customer base. Many people are familiar with VMware technology and comfortable with it, so that could provide an easy transition over into hyperconverged. Something to keep in mind here with the pure plays. We see this in our Converge research, and that is that data center customers, more than ever, are willing to detach from their traditional OEM loyalties. Why? Because there are so many challenges in today's ecosystem, in today's environments, around complexity, around management, around cost savings and limited IT budgets, especially in the mid-market. With that in mind, that's why we feel that we're seeing so much traction with these pure play platforms. Customers are not afraid to deploy business critical workloads on alternative platforms, and I'm talking alternative compared to standalone hardware, traditional hardware. Even if there aren't a lot of established use cases, we know when we ask customers what they plan to deploy on hyperconverged, we're seeing a pretty wide range of workloads. So that bodes well for all of these various pure plays, but these vendors at the same time, they represent huge acquisition targets because this is valuable IP, these are established names, and these could fit very well into the OEM businesses of some of the primary server vendors out there.
Thank you, Christian. So here's an interesting follow-up to both Christian and Scott. Any comments on enterprise-level convergence of these multiple software-defined trends and the various cloud options, private, public, SaaS, et cetera, to enable end-to-end on-demand provisioning? So I think there's a lot of ground being covered in that question. So I may join in and throw a little bit of commentary here as well. Obviously, we're talking about things from the data center point of view, flexible provisioning, meaning being able to recognize the needs of workloads as they scale up and scale down. Also recognizing the reality that many workloads are still going to be based on on-premise consumption models. Maybe they have bursting, maybe there are other requirements. So from the TBR research point of view, we see a lot of requests coming in out of the data center folks looking for simpler interfaces to consumerize, if I could make up a word here, a lot of the data and the infrastructure notification and management portals that they have into something that helps them get to the outcomes that they're looking for, right, which is to keep the lights on, keep things running, and support the lines of business as they go forward. Now, software is much more flexible than hardware, so the need is for flexibility, so we see a natural evolution to use software to fill that and to increase the amount of standardization that's happening at the hardware level. Now, the individual needs of workloads and the scale of those workloads by industry or with specialized applications is going to drive a lot of the different hardware consumption patterns. So Christian talked about, hyperconverged, converged systems are still going to be in place. Obviously, for some workloads, mainframes are still going to be in play. The implication here is that IT needs to work together with the line of business to get, more of an integrated approach. It's not just a workload by workload solution, but really, aligning IT to the needs of the business process and where you need less innovation on the part of that customer. Maybe they can get innovation from the vendor. They can purchase that either as a product or as a service. And the software-defined networking, software-defined data center will enable the IT department to, to more flexibly scale in and scale out and integrate their choices for whether that comes from public cloud or whether it's a private cloud from a partner, on-premise private cloud, or more traditional infrastructure. More comments from the team?
No, I think you covered it pretty well, Stuart.
Same here. Sorry. So let's talk a little bit about some of the questions around vendors. So which vendors, we talked about making some transitions in selling and using software. So let's talk about, we have a question here about vendors making an effective transition to selling to the new customer base that was discussed. Do you have some more insight on that?
Yeah, sure. So this is akin to turning a battleship for a lot of the established solutions vendors out there, selling to this new, what we call a hybrid customer base of IT and LOB. And in some cases, we see that customer base being almost 40% infiltrated, if you will, by line of business executives who are coming at purchases from a project or specific workload perspective, which really puts a challenge on the existing sales teams of OEMs who many are used to selling from a point product perspective. So getting them to sell from a solutions perspective that take into account all of these various technologies and the services as well to maximize the sale, that's a challenge, but they are working on it. IBM has been working on it for years and is showing success around that, and I think IBM's recent reorg plays exactly to that to allow them to more efficiently sell into these various areas and then pull in the other areas of expertise as necessary. EMC, I think, is an excellent example of a vendor who is succeeding in addressing this new customer base. Of course, EMC has the federated pieces that it needs to be able to do that, especially with VMware. So, already by default, it's talking to these new customers, and then it has the products to pull through to complete sales and help customers, address some of those challenges that I talked about earlier with, more streamlined management and so on. Others, HP and Dell. I think the challenges for HP and Dell are a little, especially for HP, are a little more complex because of the size of their portfolios. HP has many different pieces within its various infrastructure portfolios that can be challenging when you're looking at a sale from a solutions perspective. And Dell still working to integrate all of its various acquisitions over the past 5 or 6 years. If that's not down pat, it's hard to, it's hard for Dell and it's hard for its partners to address customers as it would like to with all of, all that entire IT view. But these are some of the companies that we feel are making the transition well, and we'll continue to work on that. Scott, I don't know.
Yeah, I just wanted to jump in and maybe just talk about Cisco for a minute. Obviously they're the largest networking OEM, and they're also attempting to make the transition that Christian was talking about. I think it's taking them a while. I think they've had some early successes. I think they've got a way to go. ways to go. They've spent a lot of time doing things like integrating their product and services sales teams. They're bringing in people from the outside that have experience in this area. They're focusing, investing very heavily in services areas like consulting. So I think they're certainly trying to make that transition as well. But as Christian said, it's a lot like trying to turn a battleship. And I think it's going to take a while for them to do that. But I think some of the things that they're doing in cloud and in software and selling things like enterprise license agreements that include hardware is a step in the right direction in helping them make that transition.
Great. So have one more question here. This may take a couple of minutes to answer. Do you see more widespread adoption of OpenStack as a necessary precondition to get more software-defined services into the data center? The writer says to me, the proprietary API of NSX and Viper act as a brake on their adoption or the adoption of similar services.
Yeah, that's an excellent question, and I think what we're seeing with software-defined right now is that OpenStack just tends to be a box that's checked by vendors and not something that's fully baked in the solutions. So right now, I don't feel that that's a necessity for adoption, and in the short term, yeah, those proprietary APIs that an NSX or a Viper might have can still thrive. However, as the implementations of OpenStack get more baked and develop more use cases around them, I think that is going to create a barrier to that lock-in nature of things like Viper and NSX. But it's still important to keep in mind that even those proprietary technologies in this software-defined space have a certain level of open. So customers, of course, it depends on the uptake too of compatibility. So the more logos that fall under a proprietary technology in terms of compatibility, the better that the more widespread adoption will become. But we're not seeing a lot of uptake there yet. That's still a work in progress. So short term, I don't feel that OpenStack will prevent the spread of these more proprietary APIs. Longer term, absolutely, I can see that as a threat, but there needs to be more work done in terms of the deployments and proving that OpenStack deployments in data centers have real value and have business impact.
Great. Just a quick note, any last questions, please send them in via the chat or the Q&A function. As we begin to wrap this up, certainly I want to thank Christian and Scott for their predictions. The documents are available. You can follow the TBR team and TBR on Twitter at the handles listed here. And please check our pages on SlideShare and YouTube as well. Before you sign off today, we'd like to ask you to take a brief survey about today's webinar. As we research the performance of technology companies, we're also studying how we're helping our clients, and your feedback on presentations like today's are greatly appreciated. We read through them all. So don't believe we have any last questions that came in. Quick check. Nope. So with that, I want to thank everybody for participating today. Thank you for your time. And coming up at the top of the hour, we have another TBR Future Fridays predictions webinar on devices and platforms hosted by Ezra Gottheil. So thanks, everyone, and hope to see you soon.